Morning, Steve Reed in Chicago with the morning grain comments. Well, happy Monday to everybody and hope you had a safe weekend. As far as prices are concerned, corn and soybeans are lower while wheat's about unchanged. Stock market's higher, the dollar's lower, crude's lower, and also gold is higher. I think on Friday, corn and soybean prices gave back some of its recent gains and it continued overnight on concern that the U.S. Midwest weather may be not as hot and dry as some people had predicted. And certainly this morning, the 6 to 10 day and the 8 to 14 day shows normal rains across the northern and eastern Midwest with the southwest still dry. Temperatures, though, are above normal. So again, it doesn't look like we have a chance to duplicate what we saw in 2012 or 1988 with widespread hot, dry conditions. It's going to lower corn and soybean yields here in the U.S. enough to push prices higher. So we're back against some support levels, and I think that we drift lower unless, number one, China comes in and buys U.S. ag goods, or number two, we have some kind of positive news on the vaccine. As far as China is concerned, over the weekend there was talk from China that they would step up buying U.S. ag goods. The problem is, I think they buy what they need and not based on the Phase 1 trade deal. President of the United States on Friday also said the U.S. will not go into Phase 2, which raised concern about Chinese demand. As far as the vaccine is concerned, New York reported the first time since this cases started happening in March, no deaths, which is a good thing, but we're still seeing cases increase across the southern states where they reopened. And so there's some concern about some backing away or shutting down some of the things, especially like bars and restaurants. That could slow domestic demand of food. We also know that Thailand is using a vaccine right now. We'll see how successful that is, and we're certainly hoping that all countries, especially U.S., are on the right trail to come up with a vaccine. We did note that the Ukraine dropped their grain production because of dry weather. Russia came out with a little bit lower wheat number than some people had thought. And so the Matif is at 6-week highs because of the lower potential crops in Europe and maybe the lower crops in Russia and Ukraine. The problem, though, is that, especially in wheat, the export demand remains slow. And in general, demand for U.S. corn exports and even soybean exports are slower than what people had anticipated. The USDA numbers basically said we have adequate supplies of corn, beans, and wheat in the world. So this will temper any rallies and probably have us drift lower. The bears are still talking about November beans below $8 and December corn below $3. So in this rally, I think farmers did pick up some selling, especially old crop, but they're still very unsold for new crop. So it probably suggests, at least in soybeans, that they would increase some of their selling since the weather is not as threatening. I know that the corn prices are below break even. It's tough for them to sell the corn, and the market didn't carry a suggestion they should store it. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. And remember, treat people like you would like to be treated yourself.